Hello, my name is Bill and welcome to Mind Your Crypto. Today we have something different. We have the educational video and the best trading system in crypto. So far, I have discovered one of the best, if not the best trading systems in crypto, which is unique. Okay, I haven't copied from anyone right there. I'm going to introduce you to this system, although you need the experience to fully understand it. I'm going to do my best to deliver the information to you. Thank you so much for watching. Do not forget also to join our monthly subscription, Patreon/MindYourCrypto. To fully understand it, you will get educational videos, you will get manual signals with buying and selling opportunities and many other benefits. First of all, I want to start with this one right here, okay? And the reason I'm doing that is because I want you to understand what is the falling wedge, what is the bullish rectangle, what is the bullish pennant. So a falling wedge comes after an uptrend. It has lower highs and lower lows. So the price is doing something like this, and then it goes a little bit further down, and there it is ready to go even higher. Now, the rising wedge, instead of the falling wedge, is a bearish signal, which of course, a bearish formation actually, which of course consists of a downtrend right here, okay, followed by higher lows and higher highs. I'm going to show you in the chart what these are, and then we fall down. Now, a bullish and a bearish rectangle, you actually meet it quite rarely in the crypto, but it is a formation that you can meet it. Okay, the bullish rectangle consists of a nice uptrend and then sideways movement of the price until you get higher. And of course, the bearish rectangle, it is the opposite. Now, the bullish pennant is the most common formation with the bearish pennant formation right here on the crypto market and in stock market. We are going to see that the bullish pennant is actually going with an uptrend, and we are having lower highs but higher lows, forming this flag right here. But it is not a bull flag, it is a bullish pennant. Okay, so we are doing something like this. The bearish pennant is the opposite, it comes after a downtrend, and we are going with lower highs and higher lows, forming a triangle where we go down. Now I'm going to delete this one right here, and we are going to start seeing, for example, for BTC, let's go back in the 4-hour frame to see, did we eventually have any of these formations? I'm going to show you the first one, and you can see it after a downtrend right here. You remember the falling wedge, right? The rising wedge, sorry, where we had the downtrend and we had higher lows and higher highs. Okay, this is the rising wedge right here, consisting of higher highs, higher lows. You can also call it a bear flag, okay, but I'm calling it a rising wedge, falling down further. Now, the entry point should be a little bit further down right here, okay, and the exit point should be based on Fibonacci levels and not based on what most people are doing, which they are getting into the top, for example, right here, and they are touching the bottom of the formation, and then they are moving this at the side of the box right there, and then they are exiting around here. It shouldn't be the case, it should be with Fibonacci numbers. I'm going to show you a little bit later. Just hold on into this video, it is very informative. Right here though, you should be exiting around there, and this is, what is this? A bearish pennant formation. I know that you cannot see it properly. I'm going to close every line right here, and you can see that. How you should know it, it is because if you do something like this, you connect the upper high, you can see right here, the upper side of the candlestick, the upper wick as we call it, the high of the candlestick. You can use the magnet mode into the trading view if you want to find the exact top, and you can go to the bottom trend line and connect the bottom wicks. Now you can see that we're forming something with higher lows, lower highs after a downtrend, right? What does this remind you of? This is a bearish pennant. This is why we went even further down until we just had our exit point, and we should go even higher, forming another higher high pattern until we fall even further down. Now, the case right here, and why I'm showing you that, it is because it is going to help you with what I'm going to say a little bit later. Right now though, we need something else for our trading system. We need to understand the Fibonacci retracement, how the RSI works, and we will combine all of this information to gather up into a very, very high profitable win ratio and trading system. Right now though, let's go a little bit to the RSI. Of course, I'm going to implement the 20-day and the 50-day MA. First of all, let's go to the RSI. Here is the bottom trend line. The default settings for the RSI is the bottom trend line at 30, the top trend line, which is here. Okay, you can see it a little bit at the top of this purple box, purple rectangle actually, it is at the 70. Now, when we have the line, the yellow line above the 70, this line right here, then you can see that if we have it in the blank box around there at the top of the purple area, then we can see that we are having an overbought situation. What an overbought situation means? It means that many buyers have come into the market, and we expect an exit of the buyers and the selling pressure. Okay, now what is the case with the RSI? When you see with the RSI pattern lower highs, this is the lower highs, right? When we constantly getting lower highs above the 70, and you see higher highs in the price, the opposite, this means that you are having a bearish RSI divergence. And this means that you are going into an area where we are going to see a huge correction coming in. If we go back, for example, into the daily frame for Bitcoin, you can see that right here back on 10 January 2021, we were forming continuous bearish RSI divergence following into the crash of the May-April 2021. Okay, now we had multiple bearish RSI divergences that we should be exiting the market. Right here, for example, an opposite is the bullish RSI divergence, when you are seeing higher lows in the price and lower lows in the price and higher lows in the RSI. Lower lows, okay, and higher lows in the RSI. Now, we saw that, and this is why we had the breakout. Look at that, plus 11% in just one single day. Now, I'm just telling you all of this stuff because they are much needed. I will open also the 20-day MA and the 50-day MA. What are these lines right here? These lines are exponential moving averages. They are a little bit lagging before the price. So, for example, if the price is going down, they are not going to go down right after the price action. You can see, for example, right here, the price started to go down, but this line kept moving upwards. But they give us some good support and resistance levels. And I'm going to explain why do we need it so badly. Anyway, you can find them in the indicators right here. If you go to the indicators in TradingView, you put EMA, okay, or moving average exponential, and you go in there and you just go to the settings and you add 20 days right here. The length should be 50 and 20. The source should be closed and you are all set. You can have any color you have, it doesn't matter. Now, the case right here with these ones is to go into the most important thing in the cryptocurrency market, the Fibonacci levels. Most of us disrespect the Fibonacci levels. We think that they are easy, they're kind of easy things, everyone knows it, so we think that the feds are using another system. So we constantly keep fighting to find something else. But I'm going to tell you something that it is very, very important. Anyway, we are going back to the CHZ against USDT chart. And look at what we are having right here. I'm going to delete every line that we are having. Okay, so I'm going back to the 4-hour frame. Okay, and here you can see that. All right, moving the MA 200 MA out again. And this is a single type candlestick pattern, where if you see that, you know nothing, right? You know nothing. If you see that just like that, you might be thinking that, oh, here we had a double bottom, the neckline, it went up. Here we might have a double top, but you do not know anything else. Now, what you're doing when you want to find resistance levels, you are drawing the Fibonacci from the top to the bottom. Now, what top and bottom you should be having? You should be having the top that it is higher than anything else looking in a short-term period. And of course, the bottom, that it is lower in a short-term period. Now, if I get from this top, the bottom should be always right from the top, always into the future dates, never from, for example, this top right here down to this bottom. I've seen many traders doing that. It is wrong. It is super wrong. What you need to do right now, it is to draw the fib from this top to this bottom. Now, in the Fibonacci retracement, you have many levels. You can have many Fibonacci levels. The most important are the 0.236 Fibonacci level, this orange line, the 0.382, the 0.5, the 0.618, the 0.786, 0.786 is the most important level in the crypto market. Yeah, that's right. No, you haven't heard it. You have heard always for the 0.618, the 0.5, but the 0.786, it is one of the most important, and the 0.236 as well. Now, what is going on and how, with what we said in this video, with what we described, you can have the better result possible. We need another thing to know, that each candlestick right here, green, red, has the open, the high, the low, and the close. The closing price in the candlestick is the upper body. If you go in TradingView and move your cursor into a candlestick, then you will see at the top left of your screen that you have an O, an H, an L, and a C. The O is the open, the H is the high, the L is the low, and the C is the close. The close in the green candlestick is always this line, the top of the body of the candlestick, and not this. The high of a candlestick is that. The close, the open of the candlestick of a green candlestick, okay, is this one, and the low is this one right here. Now, the opposite happens into a red candlestick. Into the red candlestick, the close is here. Okay, I'm going to actually find this one right there. I'm going to this middle candlestick, the red. The close is here at the bottom. The low is here, okay. The high is this one, and the open is here. The open and the close are the opposite of the open and the close in the green, but the high and the low remain the same. Now, combining all this information right here, why did we say that? Because right now you can see that what we want to do is simply to move the Fibonacci from the top to the bottom right here, okay, 0.1775, and what we need to do is simply to have the Fibonacci retracement right now, the 0.2436 Fibonacci retracement, which is the 0.786, the 0.2436 is the price. Okay, what we need to see in the crypto market, it is the price to close above the 0.2436 in the 4-hour frame. 4-hour frame means that each candlestick has 4 hours of price action, or the daily frame, which is the safest, and each candlestick has 1 day of price action. The higher the time frame, the better it is, and the more minimized risk that you are having. Now, what is next? We need to close above the 0.2436, right? Yeah, that's right. Did we close here? Yeah, of course we did. We closed above. We didn't cross it. We didn't just cross the line. Here, for example, we crossed the line, but we didn't close above, right? But here we close above. Now, the next thing that we are going to do is, if we close above this line, we know almost for sure the price will go higher. Okay, this is the most magnificent part. But, on the other hand, it is not always the case. And how do you protect yourself from that? This is why you have to go into the 4-hour frame and the RSI. Right here, for example, I'm seeing something bearish. I do not like this pattern with lower highs in the RSI and higher high in the price. It reminds me of the bearish RSI divergence that we had. The second thing is, if I go to the 1-hour frame, I saw something like a triangle, right? Take this from this high right here, connect the tops and the bottoms. We had a triangle. This could be bullish pennant, but I didn't tell you about the other triangle actually, and purposely I didn't tell you about it because I want to tell you right now. We can even have regular triangles, normal, neutral triangles, okay, symmetrical triangles. These triangles are neutral. What do we mean by that is that we are waiting for the price to make something. We can either go up or down, but if we close below this line, this is usually an exit point. Seeing all of this stuff right there, but this could be also a bullish pennant, right? We remember that after an uptrend, we had lower highs and higher lows. It could be a bullish pennant, but I saw the bearish RSI divergence, and I thought that most likely it could be the case that this is a neutral triangle as well. So I am combining all of this stuff, and I am assuming that I'm not going to enter right now, but I will be having it in my mind for future enter. For example, if we go down there at the 0.618, find buying pressure and close above again, this should mean that it is probably to go all the way up. So we are going to FTM, and I'm going to this altcoin right here to tell you something about the impulsive waves, okay? The impulsive waves. You know that the impulsive waves are the easiest to trade, okay? Whenever we are having the price going down from the 50-day exponential moving average in an impulsive waves are riding the 20-day, the 50-day MA with higher lows and higher highs in the price. So right here, look at this impulsive wave right now, riding the 20-day MA, riding again and again. We go higher until we go down from the 50-day MA where we have the buying pressure again. We go higher and higher and stuff like that. Okay, so right here you can see we rode the 50-day MA. We had a buying pressure route here, and this was the perfect entry point with higher lows, higher highs. Now the case right now is with the FTM. Most of the people right here, okay, I remember it easily and I will always remember it. Most of the people around here thought that FTM is going to go all the way up high. But I had to tell them this. In case we do not go, actually this is the top, this is the bottom. Okay, in case we do not close above the 0.786, we are not going to see the FTM going higher. Look at the 0.786 Fibonacci after drawing the Fib from the top to the bottom. Okay, so if we didn't close above, we wouldn't go higher. Now, what is the case with FTM in general? Okay, you can use also the logarithmic scale. Logarithmic scale sounds the best. In general, I prefer, to be honest with you, the logarithmic scale. Okay, always use the log scale. Right here, for example, let's go back to the entry point of this impulse wave, drawing the Fib from the top to the bottom again. And where you should be going into, this candlestick right here. This was the entry point. Okay, because we closed above the 0.786 Fibonacci retracement, the 1.70 USDT. Now, if I saw something like a triangle or something bad, I wouldn't be going in. For example, right here, we are having, if you remember the patterns that we saw, we are having right here a nice falling wedge or a bull flag if you want to. Okay, we had a bull flag or a nice falling wedge. Uptrend, lower lows, lower highs, until we have the exit point right here, and this was your entry point. Right now, though, we should be seeing into the weekly scale when we are approaching, because many people, what they are doing is, they are thinking and they are trusting other people that they are telling them FTM would be going to 20 USDT. I remember many people that were telling FTM is going to 10, 20, even 100 USDT back when it was here. But for me, for an experienced trader, it isn't a surprise that many people are just telling that for the likes and the clicks. So what I did back then was to have this chart in my mind. Weekly scale bearish RSI divergences, multiple bearish RSI divergences. This kept me from thinking that FTM is going to have a major crash going on, and it is going to crash so much that people would be actually thinking to sell at a minus 70%. And this is what happened. Look at that, minus 94% from where we were. Now, I know that it sounds crazy, but this is the market. We cannot keep going up forever. Sometimes we will go down. What you need to know is how to draw your fibs, how to recognize every pattern, how to spot the technical analysis, but most importantly, to compare the price with the technical analysis. If you need more videos like this, I'm always here to just upload more. Just write in the comment section and hit the like button because it helps with the algorithm and I will know if you like this type of content. If you do not like, you can also share. We have our opinions as well. Thank you so much for watching. Have a fantastic day and see you soon. Bye.